Welcome back, everyone. As promised, today's video is going to be on technical analysis. In this video, I will cover a few patterns that I think are very important to realize, recognize, and be cognizant of when you're looking at a stock. They can be useful for a variety of reasons, but mainly I believe that if you're knowledgeable of them and you can recognize when they're playing out, you can figure out how to avoid getting run over by the price action. Now, I also do want to reiterate what I said in the last video in that these patterns are not the be all end all. They are not right 100% of the time. They do have their own problems, but they work often and are useful to know. Okay, so the first thing to know, it isn't really a pattern, but support and resistance are fundamental to understanding technical analysis. Basically, when the price of a stock goes to a certain level and then bounces off of it, and then goes to the same level and bounces off again, it begins to create a reinforcing uh, level of strength because the people that didn't get to buy there last time, well, then they just want to buy there the next time it goes there. And so it just creates a level where buyers buy and sellers sell. So sometimes you'll see that the price will go to that level often and just keep going there and then bouncing off. On the left here is a recent chart of energy fuels where around, you can kind of see when it entered into its range and it's just been going up and down, kind of sideways, but kind of holding within the same type of range. And on the right, this is Chorus Entertainment recently, and you could see once it got to its range, it would move up and then go down, but it would stay, it would bounce off the top, bounce off the bottom, but stay in a range. And then once it broke out of its range, meaning once the people were done selling at the top, and it could easily go the other way if people are done buying at the bottom, it means once it breaks through those levels, it probably will continue in whichever way it breaks out from. Meaning, if you wanted to sell, or sorry, if you wanted to buy and you don't want to buy at the bottom of the range, you might want to back off because it's probably going a ways lower from the bottom. Similarly, if it breaks at the top of the range, you probably don't want to sell a few cents above that. The next pattern that I think is very, very useful to be aware of is called a pennant. It is basically when the price is forming a triangle towards the middle of a region. Basically, it'll make a lower low and then a higher high, and then it'll kind of bounce around, getting closer and closer to the middle of the thing, more or less, but basically not going higher than the first high and not going lower than the first low. Now, why does it do this? It does this because it's trying to pick a direction and it's looking for which way people want to take it because that's what chooses the price. So it's it's getting weaker on the upside and weaker on the downside at the same time, and eventually it will have to make a choice, or people will have to make a choice of the stock. Now, this chart that you see here is Cameco from before it picked moving to the downside. And that is the other thing. When these patterns break, the longer they are, the longer they've been in the pattern, the more meaningful the break from the pattern is. So a break from a multi-month pennant is significant in whichever way it goes. Now, the other thing to be aware of for pennants is sometimes when they break, or sometimes when they get very, very, very thin on all the way on the right, they might kind of reverse in the other direction because they can't just bounce around within the same half cent forever. They kind of will reflect in the other direction, getting bigger and bigger while they try and pick a direction. Similarly, if they break, they will often, but not always, retest the other side of the triangle. Because why, I don't know, but they often do. You can see this with Nutrien is a good example if you wanted to pull up a chart to see what I mean. It was doing the same thing as Cameco. It looks like it broke to the downside, then it checks back to the triangle, and then it continued more to the downside. Now, in line with the two patterns or technical feats that I mentioned in the prior two slides, a consolidation is basically when the stock price goes sideways and just for a while and moves up and down, but basically not anywhere. On this chart of Chorus, you can see it happen twice. You can see it happen from May to July of 2018, or May to June rather, before it broke down. So it was going sideways for a while, not really picking a direction. Then it broke down, and it broke down hard. Similarly, if you look at January through April of 2019, going sideways, it picked up, and it picked up, and it broke out. When most people call it when if it breaks to the upside, it's a breakout, and if it breaks to the downside, it's a breakdown. But it's essentially the same thing in that it's picked a direction and it often moves that way hard. So if there's a stock you're wanting to buy and it's consolidating or in a pennant or whatever, and it breaks down, should you try and catch it? Well, it kind of depends, because sometimes it might be a small pattern and it might just break down and then go a little bit down and then reverse. You never know. That could happen. But in real long-term patterns and moves, you often have way more of an opportunity and many more chances and time than you would think you would for a cheap stock. Now, I'm not saying maybe they're not cheap stocks, the two in the example, but you'll see. Often things go sideways. But here, this example, on the left, you have Denison. Now, they had a rough go until almost 2016. But if you look at mid 2015 through basically today, the stock has been essentially going sideways. And you've had many, many, many opportunities to kind of pick it up. Maybe not at the exact bottom, but it hasn't ran away. Similarly, on the right, Energy Fuels. If you look, there's a huge bull that just, the price just makes this huge bull. You could have bought at any point during the bull if you were just watching and waiting for it to go sideways. And then you see on the right, it breaks out of the bull and then goes into the consolidation pattern. These patterns are all over the place, and once you can recognize them and see them happening, you can save yourself from a bit of pain. So that's it for today. I just wanted to briefly cover those four patterns. If in general, anyone who watches this wants to see more, please let me know. I can do another video on a few more patterns. But I don't know how many of you are going to like this or going to watch this or going to find it interesting. I don't know. So I invite commentary, I invite questions. If there's something you don't understand, please let me know. If you want more, please let me know. If this series doesn't really interest you, you can let me know that too. But if there's enough interest, I might do one more, two more. We'll see. But for today, that's it. Hope you enjoyed and have a great day.